The Fibonacci retracement can be a really powerful tool for trend trading to improve your hit rate and also the distance to catch with your trade. If you know how to use it the right way, because many traders use it wrong and we all know how it ends, they lose money. In order to prevent yourself from doing that, we will do today a quick tutorial exactly on the Fibonacci, how to use it the right way and how to use it effectively for more profits in trading. So let's go to the chart and start right away. So let's start with the basics real quick. We apply the Fibonacci retracement from the last price's low to the last price's high and then stretch it out to the current price action. Other way around in a downtrend from the last high to the new low and then stretch it out to the current price action. That's how you apply it. The Fibonacci retracement levels act as a form of support and resistance levels of the current price movement, as they represent areas of value within a moving trend. And then we have significant levels that we look at. So we have here, I will stretch it out a little to the left so you can read the numbers. We have here the 61.8 level, the 50% level, and the 38.2% level. So this is how much the market retraces and where we of course pay close attention to the market when it moves within this area. So in this case, we see the market is coming from a beautiful downtrend, but then after this last high, it's not making a new low, instead it makes a new high. So it is trend breaking right at this point, and this is the reason why we take a closer look at it now. What most traders would probably do, they see, okay, the market is making a new high, a new low, okay, let's get into the market. It is retracing to the 50% line. Let's enter the trade into the long direction. After this candle, we set our target probably somewhere up here. And our stop loss, let's put it below the last low, but here also there is a level where the market has reacted to, so let's put it below and then let's go. Boom, wrong decision, the market came further down and here hit the stop loss. So a false trade, even though the market may reverse, we don't know yet, but let's see what happened. We have a strong support and resistance area here that we didn't take into account. Or not, we in this case, or my example trader didn't take into account. It is a significant level where the market may reverse from with more volume. So as I always recommend, don't use a single tool as a whole strategy. Always try to combine different ones with each other. So in this case, for example, if you combine support and resistance levels with a Fibonacci retracement, then you have a really powerful combination that gives you higher quality setups and a higher chance of success. It can improve your hit rate, because in this trade, for example, is a losing trade, which doesn't have to be so. I will explain just in a moment why. So it improves your hit rate, and also you can catch greater distance moves for greater profits. So what happened here? The trader didn't wait for confirmation. He or she entered blindly into the market and then got a false trade. So what the Fibonacci retracement is important for, it shows us how far the market is going to pull back if the trend continues. 50% retracement is a good level. Between 50 and 62 is even better, and the 62 is the strongest one. So let's say for a trend reversal, the market should reverse at least 50% before we enter the trade. But of course, the 62% is a significant mark as well. If it goes a lot deeper, then it's less likely that the market continues its trending direction here. Of course, it is always just an indication and nothing for sure, like it all never is in trading. We can't do fortune telling, but what we can do is good analysis for good, high quality setups. So the market has a resistance level here that is quite strong, since the market has reacted to quite a lot. Always remember, it's not an exact line in trading, it's more of an area. So the market has reacted to here, here, and here, and this time 3 times again. So this is an area where we won't enter a trade right away. We wait until the market breaks through first. In order to do our analysis, I have developed a 3-step system. So first, we will look at the market type. What do I mean with this? We are here in the British pound US dollar, for example. Every market has its specialties, and the British pound US dollar, for example, has really strong trends sometimes where it doesn't always come back to the 50% line before it continues its trend. That's usually happening in really strong trends. We will look at it later on. We are coming here from a downwards trend, and here is building now a new upwards trend, but we don't know yet. We still wait for confirmation. And point 3, the market structure. Do we have a clear trend or more of a choppy market? Some markets make really clear movements like this, and some markets have more of a movement like this before they continue the trend and have really strong movements in general, but the pullbacks are really choppy. So it's always important to know which kind of market you have at the moment. And now our market has broken through this level of support and resistance the first time. Then we wait if it's a false breakout, but the market returns up and then pulls back. So let's apply the Fibonacci retracement from the last low to the last high, stretch it out a little bit, and then we see the market came down into the area between 50 and 62%. So this is an area where we look for an entry. I will always recommend to go a time frame lower and look for a reason for entry there. But to keep this video short, I will use this momentum candle when it breaks through the last high here. Put the stop loss below this area where the market has spent quite some time, and then put the target right up here to the last high. And right here, the market hits our target. But let's take a further look at the chart. So what's left to say? Here we have a beautiful upwards trend. The market is moving really beautiful, really clear. The market retraces into the 50% area and then continues up. But what happens in strong trends, and especially in this market, quite often you see from the last low to the last high, there is a retracement that is not really strong. It's maybe around 20%. So in strong trends, really often the market only comes down to the 38% line and then reverses. But the special type of this market is, for example, that in strong trends we have momentum coming into the market here, big green upwards candles, and the market is not really retracing or pulling back. Here it's making a small pullback and then continuing further up. So this is significant for this market, and this is what I mean. You have to know the market type, what's occurring in the market that you're trading. So that's it for this video. I hope you enjoyed this video, and if you did so, please don't forget to hit the like button and to subscribe to my channel. I'll see you next week with the next video, and if you don't want to wait until then, you will find below this video the link to my webpage. See you then, bye bye.